Alright, what's going on everyone? It's the Signal King here breaking down another fire trade called in the Signal group. Now, I know I haven't uploaded a video in quite some time, but that's due to how I've been feeling with the whole chemo treatment and the whole hospital and all this crap. But you guys could expect at least one video a week how I usually do, so let's get right into it. Alright, so first things first guys, we're going to be breaking down a trade called on Wednesday. So, if we're trading on Wednesday, the high and low of day has to be coming from the highest and lowest point between Tuesday, which is one previous trading day, right? So we mark the highest and lowest point between Frankfurt to New York session. So this right here is our high of day. Then we're going to go ahead and mark this right here down here as our low of day right here. And then the same rules apply for our previous low of day. So the previous low of day is going to be two previous trading days. So if we're trading on Wednesday, it's going to be the highest and lowest point between Monday of Frankfurt and New York session. Asia session does not count. Now the key rule for this guys is to do this on the M5 time frame. So right here we got the previous, actually I marked it wrong. This is the previous low of day, and then let's mark the previous high of day up here, which is going to be the highest point right here. Let's just zoom in to make sure, and then we'll go ahead and do a top down analysis. So yeah, we got the previous high of day right here. So now the next step is to do a top down analysis and identify the next target for price and see what the lower time frames do. So if we go to the weekly time frame real quick, we could identify, let's check this out, see what's relevant to mark. We could identify that pretty much price is coming off of this weekly supply right here, but we'll refine this zone on a lower time frame because I just don't want to mark this as a weekly supply yet when it hasn't really given a big move, even though it is a weekly supply. But you'll see exactly what I mean on the lower time frames. Now, the only valid weekly demand that we could mark that's actually valid would be, honestly, it would have to be all the way down here. All these are already touched. So this isn't even valid right here. I mean, it's not that it's not valid. This is valid, but it's not relevant to price right now. So this is the weekly demand, but we got to see what's actually relevant here on a lower time frame. So we go to the daily and you'll see exactly what I'm talking about. So on the daily, you can see that price is pretty much coming off of this daily supply right here. It's the weekly, but you can see it's pretty much the daily to the exact pip. So price is coming off of a daily supply. Now, daily demand is going to be this one right here as a target. We'll refine it now in the H4 though. So we got daily supply, daily demand. Now we go to H4. H4 targets in confluence with the daily. So this is the main target for price this week right here. We can mark this right here as the H4. This is the first target down here. So right off the bat, just doing our top down analysis, we could identify that price is coming from supply. So now price needs to find demand. We have a nice void to fill. This is the first target right here. This is the first target right here, this H4 demand. So we go to the H1 right now, and the H1 is in confluence with the H4. So we have nothing stopping price right here, a nice void to be filled, with this being the first target for price. Once price breaks past this area, this is the next target for price down here. Now, when we go to M15, this is the sauce right here. Notice how our previous session is setting us up. So we have pre-New York giving us a M15, M5, and an M1 supply in confluence. So if we just break this down right here, notice how we have pre-New York giving that M15 supply right here, this push, that distribution. We go to M5, notice how we have the M5 in confluence with the M15 right here. And then if we go to the M1, we also have the M1 in confluence with that M15, M5 as well, so right here. And you could even say that the low of day is somewhat in confluence with this zone. So when you have this scenario like this, all you have to do is literally just place your sell limit. This was the sell limit called in the Signal group, like this, with these parameters here, and you can see that our stop loss covered all three time frame supplies and the low of day, because you don't know which one price is going to react off of. But as long as you are in the trade, it doesn't matter if you're going to drawdown, as long as price reacts off that area. Now check this out. New York session pulls back into this area, and right away price, you can see right here, I think Asian session is the one that hit take profit right here. Perfect. So you can see how perfect this trade played out right here. You can see that pre-New York set up New York session pulls up into this area, gives it distribution, and then there's not enough volume to take profit. So Asia is the one that brings in that volume right here. Now price did give a 1 to 2 in the Signal group. Whoever held this trade a little bit more could have got almost a 1 to 3 out of this trade. Alright, so you guys are seeing how precise this strategy is, and the same rules apply in every single video. I did not change them at all. So all you have to do is just backtest this strategy and you will see results. I can guarantee that. Now, if you guys want to be part of the Signal group link is down below. Also, make sure you guys follow me in the free Telegram and on Instagram, where I drop loads of value every single day.